Let's talk about some terminology. What's a contingency? We're going to talk about contingencies and commitments. A contingency is a situation with some amount of uncertainty, such as a lawsuit, that's going to be our classic example, as to whether it will result in a possible gain or a possible loss. This could also be a possible insurance payout. It could be suing a competitor for them using some copyright infringement. It could be a result of an injury lawsuit, your product injured a customer, class action lawsuit, many, many examples. So when are these situations resolved? Well, it depends on the event. And like we talked about, a lot of these could happen in year one and it's resolved in the beginning of year two. What's the result of one of these contingencies? Well, usually it results in the reduction of liability, a loss impairment of an asset, which this would be if someone sues you for copyright. Well, you got to write down the asset because it's not your asset, or the incurrence of a liability, which you're going to have to pay out. What are our treatment for this? Now, we're getting into the territory where this is going to be semi-overlapping with FAR. A couple points on that. I feel no shame in double dipping and showing you all this, even though it's the audit exam. A, because you'll have to see it for FAR again if you haven't taken that. B, it's also important to understand what's our process here, right? Our process is on FAR, we prepare the financial statements, and then on audit, we audit the financial statements. I think a good way to understand how to audit them is first to understand how they're prepared. Now, that being said, a lot of this could be asked as audit questions. So, that note, I actually wouldn't say to skip this at all. Just study it, enjoy it. You're spending more time with me. Couldn't ask for much more than that, right? Now, the questions will tell you, oh, this amount is probable, and we can reasonably estimate. The questions might also say, oh, it's reasonably possible this will happen. Lastly, they could say there's a remote chance it'll happen. And it might say, oh, you're getting sued. Your lawyer says there's a remote chance that this will happen, or it's reasonably possible that this will happen. One point that could be a trick is you can't take management's word. If management says, oh, yeah, it's remote that we're going to lose this lawsuit. No. Sorry, management, we can't take your word for it. We need to check in with your lawyer to see what they say, because they are the more independent expert in the area of how they think it's going to resolve. If the possible situation is probable and it's subject that you can actually reasonably estimate it, then you're going to record it in the financial statements. If it's reasonably possible that'll happen, and whether you may or may not have an amount, you'll just make a footnote disclosure in the financial statements and just say, hey, this is going on. And if it's remote, meaning not really a chance it's going to happen, you don't have to disclose anything, right? If I'm suing Disney for, I don't know, I was at their park and I had a bad time, and they said I'd have a good time there, that's probably a remote chance that they're going to lose a lawsuit. Loss contingencies, we got gain and loss contingencies. We'll talk about both of them. Now, loss contingencies, these involve a possible future loss whose existence is proven by subsequent events. How do you know if you're going to lose the lawsuit? You look for the subsequent event when it actually happens. Common examples are possibly uncollectible receivables. So you've got money owed to you and then the customer goes bankrupt or something, or they just say we're not going to pay you. Any claims against the company from any reasonable party, again, meaning I can't just sue Disney parks and say, hey, I had to wait online for a long time. I didn't have a good day. A reasonable party would be, okay, I made a product and someone used it and they burned themselves. All right, that's a reasonable claim. We've also got yet to be determined losses from property destruction, possible insurance payouts. We've also got liabilities on warranties for products. So if everyone wants to return their busted TV, if we just sold 1 million TVs, but everyone bought warranties and all those TVs are turning out to be defective, that could be a possible future payout. And lastly, ongoing litigation against the company. Now, what about let's be optimistic. What are some gain contingencies? Well, there's only really two main examples here. A lot less positivity going on. Well, we have a positive outcome or settlement from a court case that was in process, but it's now been resolved. Just if you're on the possibly winning end of the lawsuit. Also, an example I've seen used before in the exam is refunds from resolved tax disputes with the IRS. The IRS says you owe us $1 million. You say, all right, I disagree. And, if there's one thing I learned working in tax, it was how gray area. I always thought it was black and white, right? Just do a little calculation. This is how much tax you owe. Tax is such a gray area. So many companies will just actually hire tax lawyers and argue with the IRS and saying, no, we don't actually owe you that much money. Sometimes you win, sometimes you lose. And if you do win, that is a possible gain contingency. is getting money back from the IRS. What are we going to see when we talk about recognizing and measuring gain contingencies? And this is all going to come together. I've got a nice visualization, a nice graphic to go through gains and losses and how we affect for all of those if they're reasonably possible, remote. But let's just touch on this quickly here. Gain contingencies are situations in which the company may receive an asset or gain based on some event in the future. All right, yeah, no, makes sense. Gain contingencies are not recognized in the financial statements, however, may be disclosed if they are probable or reasonably possible. General note, and we'll see this in the graphic I just mentioned. Per the rules of GAAP, we are going to, in FASB, right? All that, per those rules, it's much more likely that we're going to disclose or account for a loss contingency than a gain. It's kind of like, hey, don't overstate your possible gains, but we're going to make you overstate your possible losses. Let's see. The company should disclose a contingency that may result in a gain in the notes of the financial statements, but avoid misleading implications about likelihood of realization of it really happening. If there's a range, so if we're going to see in general, if there's a range for any of these contingencies, such as the possibility of winning between $1 million and $10 million, a successful lawsuit, then we're going to state the range in the notes of the financials. Now let's go see that wonderful graphic I was telling you about. This is something you would have seen on FAR if you've taken FAR with us, and if you haven't already, I'll be with you there as well. What we're going to see here is, in general, always, right, you're going to disclose. Just disclose. And actually, well, you're not going to disclose these remote ones, so this applies just here. Now, what are our treatments? We've got our gains here. Gain, and we've got the losses. So if there's anything that's remote, you're just going to ignore that. Cool. All right, not going to account for that at all. Now, here in disclosure, so and if you're accruing for something, you'll disclose it, but it's really referring to, are you going to disclose the amount and the nature of it? So are you going to disclose that, hey, we're going to owe $1 million? And what does that $1 million come from? Now, let's see. Loss contingency that's probable and the amount or range of the dollar amount could be reasonably estimated. We're going to accrue the amounts or the minimum amount that we could have to pay out. What about if the range or amount can be reasonably estimated, right? We're going to disclose the amount and nature because it's, not particularly probable, but we can just reasonably estimate it. What about if the loss contingency is reasonably possible? And they'll use that language in the question. They'll just say, you don't have to determine, what is reasonably possible. It'll just say, hey, this is reasonably possible. We're going to disclose the amount as well as the nature of it. Oh, this is where we're having to pay out from, right? We had a warehouse burned down and we have to pay out lawsuits. People sued us because it burnt down. Loss contingencies that are remote, but it's a guarantee for others. We are going to just disclose that. Now, this one you probably won't see as much, but as if their lawyers say it's guaranteed for us, but your lawyer disagrees with that, wouldn't see that as much, quite likely. Next, we have gain contingencies that are probable or reasonably possible. You're only going to get to disclose these. You only get to actually accrue for gain contingencies when they actually happen, when you actually receive the money. So the rules are a little bit stacked against you, but that's life. And then when it's remote, we're just going to ignore that. I've memorized this, be quite familiar. You can see this in a sim or a bunch of multiple choice questions. Good to know. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.